Hello, good morning, Texas and Louisiana. Welcome on Smart Money Culture TV network, coming to you in your homes there in Texas and Louisiana. Welcome, world, for joining around the globe on YouTube, X, LinkedIn, and the rest. I'll tell you what, as I am watching what is going on in with Trump and in the world, period. It is just really it's astounding. It's eye opening. It is just it's hard to really get my head around. And I tell you, I was down at Bitcoin Ben's event. I don't know, half a year ago or something, and I told everybody that I thought that it was already decided that Trump was going to win, and Trump was going to win the election, and they were going to just make sure that he couldn't do anything. And actually, I saw some videos coming out yesterday talking about how he is being surrounded right now with WEF, World Economic Forum people and globalist type people that are not going to do anything that you and I, or most, I should say most, really Americans support. And, we saw that as really a constant problem with, before, right? That was one of the things that was, besides his first cabinet, I didn't really like anybody, right? I liked that first cabinet that he had, but I didn't really like anybody after that. And I don't know who, I don't know how he decided to get those were the people that he decided in order to choose. When you're like that, you're insulated. And I used to always tell people as well, like, you got to yell and scream to make sure that he hears you. And of course, now even more, I think as he's on Truth so much and not X or Twitter, that it's going to be really even harder to do that. So anyway, point is that now I tell you what, guys, I really don't know. I don't know if they're gonna let him win or not. And I say let him win because we didn't do anything at all. We didn't do anything about the magic electronic voting machines. We did nothing. We're on the same magic electronic voting machines. And the absentee ballots, or as they call them, mail-in ballots now, are actually, there's more than ever. More than ever. And so I guess the strategy now is to try to beat the Democrats at their ballot harvesting game, but they're holding all the cards. And it's ridiculous that they're holding all the cards because we've had control of Congress. And but we didn't do anything about those machines. So if he does win, I think that will be, they've already decided he's going to win, and I was right months ago. And they're just going to really make sure that he's not able to do anything. Now, we could be looking at a impeachment right off the bat as well. I'm not sure about this, what's going on in New York. If everything's rigged, and he is he's on a criminal trial out there, and do you think he's going to win that? I don't know. And then his lawyers are, I don't know. I'm not impressed. I'm not impressed. Are you impressed? I'm not impressed. So I don't know. We'll see. But it doesn't feel like he's going to win, does it? I mean, he should win. I understand the will of the people is that he wins, but it doesn't feel like they're going to let him win. I mean, how does that work? So he's going to go from criminal court to the White House? I don't know. It's not jiving with me. Maybe. I hope so. And then I hope he's able to do something. But it seems a bit far-fetched that's going to happen. And this is the slow boil that we've experienced for the last 110 years since the Federal Reserve, since the central bank took over the United States. It's a slow boil. So I don't know, guys. I don't know if they're going to let him win now or not. I was convinced that they were going to, quote unquote, let him win, but I don't know now. I think that they've gotten such an upper hand. And then we look at what's going on with the censorship. The censorship's absolutely unbelievable. That these people around the world feel like, and it's not just Australia right now is under the microscope because, of course, they've come out and said that they want to censor this video of the bishop getting attacked. And I mean, let's face it, guys. We've all seen rougher videos on games that the kids play, right? On PG-rated movies. I mean, guy comes up there and he's stabbing the poor priest, but the guy survived, and by all he's just like so. But the Australian government wants to censor that video from the world. From the world. You can't see this video. And the audacity of these people. And I bring that up because it's not just Australia. That's what all of these people want to do. I mean, the U.S. wants to censor this stuff. All the countries of the world, really, they feel like they have the right to censor or try to censor. Now, I did find out something as well that was very interesting. Did you know that the CIA's second office was in Australia? And on that note, I won't spend a lot of time on it today, but if Tehran, I put out a tweet or a post yesterday, if Tehran keeps not responding to Israeli attacks, I think that the CIA and the Mossad are going to turn their sights on Taiwan, somebody where they can do more buildup, because they're going to want another $100 billion in 2 months or so. That seems to be the schedule they're on, for the war machine, for the military industrial complex, one way or the other. And if they're not getting the response from Iran and in the Middle East that they need to build up and sell more arms, they're going to figure out another way to do it. And China, guys, like this is crazy. This is crazy. There's like 1.6 billion Chinese or something like that. I mean, can I remind you that there's 335 or 40 million Americans? This is crazy. This is crazy. And China, I think that China actually, at one point in history, and maybe they still do, but I think they've kind of decided something different. But at one point in history, I think, yeah, sure, they wanted to maybe, conquer the U.S. But I think they pretty much decided that we're a much better client. We buy everything from them. Why in the world would they want to conquer us? Take on our debt, take on the mess that's over here. I don't think they want to conquer us. I think that they want to sell us stuff really cheap. They want to sell us stuff actually really as they want to produce it as cheap as possible and sell it for as much as possible. And I think that's China's deal. I think that's their deal. I don't think that they're interested in a confrontation with us. We are very much a forward-moving. We put our military assets very close. If China did to us what we did to them, we would be really up in arms. And the same thing goes to the countries in the Middle East. We put our bases right up next against them, and that causes all kinds of stuff. But yeah, I don't know, guys. So the markets, again, the markets, I think, will continue to pump mainly. Well, there's a number of reasons, but a big reason is because we're going to continue printing money, right? We're going to continue to print money, and we've gotten on, like, Washington is actually, they really don't even know how to operate anymore. All they know is pass bills and allocate more money, print more money. That's it. They don't know. They never work on balancing a budget, which of course it's impossible to balance the budget anyway, because every $100 comes with $3 worth of debt to the Federal Reserve over here. Okay, so their central bank, which should be illegal. It was illegal until they passed the Federal Reserve Act in the dead of night. But these guys don't know anything else other than printing money, and that's it. So we're on a vicious cycle here. Gold is down. Interestingly, I'm curious to get Matt's take on that whole bit too. I know he talked about Iran making a big buy and probably selling now. So gold is down, silver is down, stocks are up. Dow futures is kind of flat, but I think that it's going to signal an up day. We'll see. Hong Kong Stock Exchange up, Asian markets are up. Bitcoin is up slightly. Ethereum's up nicely. Some of the other ones are up nicely. I think those will probably continue. There's some discussion in some of my groups last night. They're going to pump it to $1 million. They might pump Bitcoin to $1 million. It won't happen overnight. I don't think any moves like that are going to happen that quickly. But those assets, of course, people are going to continue to move to those assets as more and more of the dollars continue to come out. Fed is going to have their meeting coming up soon, and they're going to tell everybody. I mean, I can't imagine they tell anybody anything other than they can't change rates or we're going to raise rates. I don't think they're going to raise rates at the moment, but that is going to continue to keep things, keep money expensive. That's going to keep the housing market prices. It's going to suppress the prices a bit more, which is fine. Is really that part of it is the house prices are really high right now. Unless you just look at it with the inflation part, then it kind of makes more sense. But yeah, I mean, there's on my street we have two seven-figure houses. They're both for sale. Looks like the people are pretty stressed out, to be honest. They look a little stressed out as they're doing it. I noticed them cutting corners on stuff, but you don't want to cut corners on houses like this. Trust me, that becomes pretty obvious for the buyer. But that's what they're doing, and I'm sure it's pretty stressful information there. Pretty stressful situation. So the administrative state, I call the administrative state, the deep state, I call it the administrative. I think it makes more sense to people. The administrative state is what is actually running the U.S. And that's why I say, even if Trump gets in, is he going to, we probably won't be able to do anything. The administrative state, it includes all of the rank and file people that have their jobs for 20 or 30 years. It's pretty much impossible to fire people here, especially, and I don't mean this in the wrong way to anybody. I love everybody, but especially if they're some type of minority, quote unquote minority, because at this point, especially in my area, we're a majority minority. So I'm actually a minority. If you want to use minority as a definition, but I'm still going to use minority. But especially if you're some type of minority, it's impossible. It's impossible to fire people, pretty much. You're going to have some lawsuit coming after you. So that part, you also have the judges. You have all these people that make policy. So the Senate and the Congress and whatnot, they pass legislation. And then the pencil pushers, the administrative state, makes the policy, and they can policy out of they can make some funny policies out of legislation. So pretty interesting moment we are in history around the world, and we're going to pull out of it one way or the other, hopefully on top. Speaking of on top, let's figure out how we can get on top with our money. Sir Matt the Great, how are you?
I'm good, thank you. How are you, Bruce?
It is nice to see you. How is the weather out there in Dubai?
Oh, we're back into the sun again. Rain is all gone. Can you hear me okay?
I wasn't able to at first, but I don't know if I was on mute since I didn't have anybody talking to me. Maybe I was on mute the whole time. As long as you guys could hear me, though, it was okay. But I can hear you now.
Yeah, everything's brightened up again. Weather's looking great, and the market's looking great. Got some interesting stuff today. I don't know how much time we've got, whether you've got other guests or anything lined up.
We have time today.
Good, because I've got some what I think is very, very interesting stuff. Fascinating.
Amazing.
It is funny. Let's see what you think. So I'm sharing my screen, and I
Yes.
trust you can see that.
Yes.
Let me just go straight from the start so you can see it in full there. So I've actually got here the dollar index, because I just wanted to look today really at the value of the dollar and how this is correlated with Bitcoin prices. I've said before, there's all sorts of different correlations, but this one is just directly between the US dollar and Bitcoin. And I think I've looked at interest rates and various correlations, but this one's interesting. So Bitcoin, as we know, started the beginning of 2009. The first known transaction was actually where a guy called Marty Malmi sold 5,500 coins, and that gave Bitcoin a value. I think this was in October of 2009. Bitcoin had a value of not a dollar and not a cent, not a dollar, not 10%, not a cent, a tenth of a cent, but 900ths of a cent. So less than a hundredth of a cent, basically. So Bitcoin was effectively worth nothing back then. And this was the first transaction, proper transaction that was recorded. So the first Bitcoin block was mined, and then we had the first transaction, recorded transaction, October 2009. And as I say, it's for 900ths of a cent. Is that 900ths or 9,000? Let me just see. Tenth, that would be a cent, a tenth of a cent, a hundredth. So 9,000ths of a cent. So not even a hundredth of a cent.
Yeah.
So that was the transaction back then. But what's interesting is this correlated with, at the time, pretty much a low in the dollar. And this is actually showing from the financial crisis back in 2008, 2009, showing the progress of the US dollar, the DXY, the dollar index, which is the dollar measured against a basket of world currencies. And so we see here that when Bitcoin, this was just at the depth of the financial crisis, Bitcoin was launched effectively, and the US dollar then turned and began to weaken from that point onwards. So what happened was, when the financial crisis came, everyone ran to the dollar. And that's what happens when we see real crises in the world, whether it be economic or geopolitical. People really tend to run to the dollar. And in fact, they have to, because what they've done is invested into all sorts of other things. When crisis comes, the money comes back to US dollars, to treasuries, because treasuries are seen as risk-free. They're seen as the safest place on earth, really, to put your money. How true that is, who knows?
Well, that is funny, right? Treasury meaning bank, I guess is what you're saying, right? Because the bank, the FDIC, I've talked about it a bit, not to interrupt your thing here, but the FDIC right now, even as of a year or two ago, it was holding 1.7% of all the assets that it supposedly is backing. And after they did the bailout of the 5 banks last year, it's now holding 0.07% of all of the assets. So I don't know how safe the quote unquote treasury is, but yes, people run to the dollar. I think part of that as well is that you can then, once it's in the dollars, you can immediately or much more quickly put it in other different assets.
Yeah, this is actually short-term government bonds we're talking here, but you're absolutely right in saying that the banking is on the verge of a crisis. It seems we've had a crisis. We had a lot of banks go bust last year.
Yeah.
And this getting high interest rates is putting more and more pressure, really. So we see here anyway, we've got Bitcoin, as I say, when it was launched, the dollar was very strong because everyone had already run into the dollar. And then after that, we started to see some recovery, and that's when we saw Bitcoin beginning to appreciate from nothing effectively to 2009, October 2009, that transaction where it's 900s, not even 900s, I keep saying it's, anyway, it was nothing basically still. So 0.0009 of a dollar. So it was, Bitcoin was not really recognized by anybody. It's just some crazy idea. And it's only some really visionary people, usually young individuals, who got into Bitcoin in those very, very early days. And they're the people you could buy an awful lot of Bitcoin. I mean, just imagine that. The Bitcoin was valued at there was 5,050 Bitcoin was that transaction valued at that price. So just imagine whoever bought those 5,000 Bitcoin, if it held until today, what they would be worth.
Billion.
Yeah, absolutely phenomenal amount of money. And then we saw the dollar rally basically then. And that, when we saw the dollar rally, we did see Bitcoin was actually in the very early days. So Bitcoin wasn't necessarily had anything to do with the dollar. In the early days, it's very much more to do with just the fortunes of Bitcoin. Was it a real currency? Did it have a future? So it wasn't so much tied to the dollar. But as time goes on, more and more and more, and Bitcoin becomes more recognized as a real asset, whether it be safe haven asset or risk asset. It's probably a bit of both at the moment. But in the early days, and this is why, by the way, for anyone who's a bit technical, I don't believe in using logarithmic charts for Bitcoin from the early days, because it wasn't, those early days of price discovery, as it were not really representative of anything. It was just really blowing with the wind, as it were, in the early days. But then we saw, anyway, Bitcoin price, we saw the dollar then crashing to a low at the time, and we saw Bitcoin appreciating. So we're beginning to see a sort of trend now beginning to take place. So dollar crashed, Bitcoin appreciated to $30. Then we saw dollar appreciation here, and we, until 2012-ish, to late 2012, and we saw Bitcoin crashing from $30 down to $9 per Bitcoin, and that was coincided with the dollar peak at the time. Then we saw the dollar collapse again to a low again, and corresponding with that, we saw Bitcoin appreciation to $447. And then we saw dollar appreciating, and as you'd expect, Bitcoin crashing to $244. And then we saw we saw then basically dollar crash, and we saw Bitcoin appreciation as you'd expect. This is the one kind of outlier that we see, which we saw a little bit of Bitcoin appreciation with dollar appreciation we saw there, where Bitcoin went from $531 to $775. That was in 2017. Then we saw Bitcoin go from 775. We saw the first, a really big rally then in Bitcoin as the dollar depreciated and fell to a low. We saw Bitcoin appreciating from $775 to $9,900. I mean, that was an amazing sort of milestone at the time, virtually $10,000 per Bitcoin. Absolutely crazy. Who would have believed it? $10,000. And then we saw a bit of mild dollar appreciation. You can see very choppy, sort of correcting move upward here, but some dollar appreciation and some slight Bitcoin depreciation. Again, exactly what you'd expect. As dollar appreciates, Bitcoin depreciates, and vice versa. And then we saw the big Bitcoin boom, where we saw Bitcoin go from 8,600, the dollar fell dramatically, and Bitcoin appreciated dramatically, as we'd expect, to 67,000. So that was that previous all-time high that stayed for quite some time. And then we saw, obviously, the crash that we saw in Bitcoin. It actually went lower than this, but at that time, we saw Bitcoin going down to 19,000. It actually went to about 15.5 with the FTX crisis. But at the same time, we saw this massive dollar appreciation, Bitcoin crash. Again, exactly what you'd expect. So then we've seen from that 19,000, we've seen dollar now depreciating massively and Bitcoin appreciating. So getting back around that previous. So today we're actually at 66,000. So virtually at the previous all-time high for Bitcoin. It's around those sort of levels. And that's where we're at the moment. And you can see DXY, the dollar, is sort of mid-channel right now. This long-held, reasonably well-held channel from right back from the financial crash of 2008. We're still right center of that channel, really. It's an upward-facing channel, so dollar has been appreciating slightly over the long term. But we'll look at this in a shorter time frame as well to see where we're likely to go. But right now we're mid-channel. If dollar were to depreciate within this channel to the bottom of the channel, as a lot of people are expecting, then who knows I've got Bitcoin XXX. Who knows what it could appreciate to, because we've got all those other fundamentals that are falling into place with the Bitcoin ETF, with the halving, the diminishing supply, with the runes, so this new innovation with Bitcoin. So nothing standing still. And if the dollar does depreciate, it would probably coincide with another massive new all-time high for Bitcoin. As I say, who knows what it could be. If you look at the actual size of appreciation from when it was 0.0009 of a dollar to now, today, $66,000. If you see more dollar appreciation, we could see Bitcoin. We actually could see it 100,000, 250,000, a million. Who knows? We could see some amazing Bitcoin appreciation coming. So this is just looking at, again, just in slightly more opened out, but we've been through that story of where we're going. So I've just shown it here in a little bit more detail because I measured this wave up here, which is this green, all these green candles, which looks a bit impulsive, probably an A wave, and a B wave down, which is more choppy. And we could be getting another A wave. If it's equal to the previous A wave, as is often the case with Elliott wave, then the target for dollar index would be 108. That could potentially tell us that we may see a little bit of a short-term, consolidation in Bitcoin. Because remember, as dollar goes up, we tend to see Bitcoin usually going down. It's not absolutely tightly correlated, so it's not nailed on, but just we're very close to that level anyway. So I would say probably maybe a bit more Bitcoin consolidation before we see dollar depreciate and then massive Bitcoin appreciation. So that's kind of what I'm expecting. This is looking at a shorter term view. This is just the 4-hour chart. Sorry, this is the daily chart, but it's much shorter term. So we're looking really from 2000, the beginning of this year, really. So just the movement so far this year. And the dollar appears to have moved up in what's called corrective fashion. So we may have, this would be 100% here, or we could go to that 1.618, which was 108 on the dollar. So not sure quite how much higher we might go. As I say, we're just chopping around with the US dollar and probably chopping around with Bitcoin. But we will look at what the outlook is for the dollar. But quite interestingly, just in this W wave, we can actually see in the waves, you see a 1, 2, 3, 4, 5, 6, 7 to make the W wave. Now 7 is really interesting because first of all, this wave overlaps this wave. It's telling you it's not an impulsive wave. This is a corrective wave. 7 is actually a corrective number. It's not impulsive. When you see 7 waves, it's just a correction. And then we did see price move down substantially in 3 waves, and 3 waves are also a correction. So we're seeing correction higher, correction lower. So we'd expect a further correction higher to complete an overall larger correction, WXY correction. So we're seeing that moving up now. And again, that is also split into 3 larger waves. And if we looked individually again here, 1, 2, 3, 4, 5, 6, 7 for the A wave. So once again, corrections within corrections. This is all corrective movement for the US dollar higher. It means that the impulsive direction for the US dollar is going to be downwards. So that means we will see dollar depreciation, I believe, probably in the not too distant future. This year, we will see dollar depreciation. And we'll finish on a chart today, which shows us how important that is. But we're already seeing that if we see dollar depreciation later this year, it's highly likely that that will be accompanied by Bitcoin appreciation. So whilst we might be a bit choppy at the moment with Bitcoin, the longer term outlook, if US dollar, if all this is correct, and I have no reason to believe it wouldn't be, this is a correction higher. We're going to get an impulse down, which will mean we're going to get an impulse higher for Bitcoin and other cryptos. So that's really interesting. This is the next level of interest, which will be the 100% projection of this move here, projected to here. And it's also corresponds to the 100% projection of this wave. They coincide together. So it's a very, very powerful level. It can break through it, but that's a very powerful level for a potential turn back down in the US dollar. And this again is looking perhaps slightly longer term in US dollar, just opening out that picture. That was the level we just showed with the 2 coincidences there of the Fibonacci level for 100%. If it were to break through, and it's entirely possible, to the next level, that would be 1.618. So I've got why with a question mark. It's either going to complete here, or the next level would likely be here for the dollar index, which would be 108.33-ish area. So if it does that, we could expect possibly a bit more choppiness, maybe a little bit more uncertainty with Bitcoin. We're going through a little period of uncertainty right now with Bitcoin and with crypto. Yes, they're pushing up quite nicely, but nothing really impulsive. But if we see a turn down here, as I got indicated with this massive red arrow, if we do see a downturn in US dollar, that will take us, just going back, right to the bottom of this channel. And that will be where Bitcoin could be massively appreciated, some massive appreciation with Bitcoin if we see US dollar do this. And again, we'll consider whether that's going to be the case. So here's the big picture of the dollar index, where it's likely to go. So what's going to drive it? Well, we've got durable goods orders. I think they're coming out later today. They're expected to rise. So at the moment, we still have a bit of upward pressure on inflation. I mean, durable goods orders, this is for long-term goods, basically, for orders in those goods. And if we're seeing it picking up from these negative reads that we've had fairly recently, if we're seeing it beginning to pick up, that's kind of positive enforcement or reinforcement for inflation. In other words, it's not a good sign that we're potentially seeing still upward pressure on inflation. So if we see upward pressure on inflation, that would potentially mean they're going to keep rates higher for longer in the US. So the Fed have been talking about trying to lower rates for a long, long time, and they keep pushing back their expectations for lowering rates. So as Bruce said, come this May the 1st, that's the next Fed rate decision. They're not going to lower rates. They can't lower rates because inflation is still a problem. Inflation is still way above their target 2%. And so they can't possibly lower rates at the moment. And they've got still some inflationary pressures, as we see here from durable goods. But interestingly, at the same time, we've got GDP figures being announced shortly after. I think it's next day or two. GDP, and you can see here it fell from 4.9 in Q3 of 2023 to 3.4 in Q4. And we're looking here at Q1 of 2024 to fall from 3.4 to 2.5. So we can see here that growth is falling very, very rapidly. So the Fed really do have a dilemma because they've got elevated inflation with falling growth. What can they do? They can't afford to lower interest rates because they've got inflation being a problem. But they want to lower interest rates if growth is declining this fast. And in percentage terms, it's declining very quickly. So the Fed have a real dilemma on their hands. And here's core PCE again coming, I think, next week. And again, we can see here the year-on-year PCE is basically looking at to rise, in fact. So this is a measure of inflation, and it's looking to rise. So this, again, we can see on the longer-term chart here, we had inflation falling, and this was all to do with the raising of US interest rates. It had an effect, had a really positive effect on reducing inflation. But now the last couple of months, we've seen it begin to tick up. And it looks as though the next reading is going to tick up again. We've got here effectively 2.45 or 2.5 as it's got here, rising again to 2.6. So inflation is not beaten as yet. And that is a major worry for the Fed. And you can be sure they'll be talking about it in the press conference after the meeting next week. I think next week, Wednesday, they'll have their interest rate decision. They'll have the press conference and the Fed chairman speaking about expectations for the economy. So at the moment, they're walking a tightrope, and they've got some problems. And they've also got, I mean, the next one after that, I think, is these are sort of key points, key data points that people would look at for the health of the US economy. And this, for example, the ISM manufacturing, if the figure is below 50, it means manufacturing is declining. And you can see for a whole year, manufacturing was declining. But now we're seeing March, it actually picked up. So that's over 50 means it's actually in expansion territory. And it's looking as though it's going to stay around that 50 area. We'll see what the expectation is, but I think it's going to stay somewhere around that area. But if they see it declining back into contraction territory, Again, that's a big problem because this is about manufacturing. If manufacturing is contracting and yet inflation is still elevated, it is a very big problem that the Fed have to deal with. And then finally, we've got here Fed interest rate decision, as I say. Looks as though it's nailed on. They're going to keep the rates steady yet again, but let's see what the guidance is moving forward. This, we've shown this before, but we need to keep coming back to it because it's so important. Unemployment right now is at a cycle low. Every time we've seen unemployment at a cycle low, and then unemployment starts to rise, we see that is accompanied by a recession. And we're seeing this going all the way back to 1950, so 75 years approximately we're seeing going back in history. Every single time, cycle low in unemployment followed by recession. 1954 or somewhere around there, 53, 54, cycle low in unemployment, recession. Then 58, cycle low in unemployment followed by recession. Low in unemployment, recession, low in unemployment, recession. Every single time without any failure whatsoever. This is one of the most accurate predictors of recession coming. Right now, this is up to 2020. We saw obviously that was to do with the COVID crisis, but again, we saw a cycle low in unemployment followed by a recession. That was a very mild recession, and that was because they dug us out of that recession by printing money like crazy, like back in 2008. That was caused by, there was a massive crash at the time in risk assets, and that's why the recession was longer, massive crash there. This was very short-lived. Yes, it was a crash, a very temporary crash, but they bailed out immediately by printing money. Here, the money printing gradually came into play to try to bail us out, and that's what caused this recession following that cycle low in unemployment. So right now, we've seen all-time lows in unemployment. It's probably at cycle low. We're going to see unemployment beginning to tick higher. And that's the sign, once it begins to tick higher, that's the sign that recession is around the corner. And so that is what's going to be driving the US dollar. So we looked at the relationship between Bitcoin and the US dollar. So if we see recession, then we're going to see them lowering interest rates eventually at long last in the US. That's if they can, if inflation's under control. But my thesis is that inflation will actually come back under control as long as we don't see geopolitical crisis with oil prices going through the roof. If we don't see that anytime soon, we are going to see prices come under control, inflation will come under control, and then they will be able to actually not only reduce interest rates, because recession is going to be probably quite deep this time round, they're going to actually go back to money printing. So that crazy money printing idea, which is just an experiment, unproven experiment, but that's what they're going to resort to again to try to re-stimulate the economy, because interest rates alone won't do it. Here's one of the best recession indicators, and it's based on GDP. And I mentioned to you about they're expecting GDP, and GDP is falling rapidly. But this just shows, what's happening. There's a relationship, as I say, between GDP and recession. And that's the last one we had, the last recession there, where we had a low in GDP. And again, the same is looking to happen now as we're seeing GDP falling rapidly. That will probably coincide with the next recession. So that was the COVID recession. This was the financial crisis recession. This was the dot-com boom and bust recession. This was the one following the recession in the early 90s, where we saw interest rates spike and we got a recession then. So all these recessions, that's a great indicator, is looking at GDP. So we'll just skip back now to, in fact, I thought I had one more chart, but it's okay, we won't look at that one now. We'll just look at we'll look at the usual charts going here, where we are with Bitcoin. So let's look at shorter term. That's just basically a summary of interest rates. And what we've looked at today, just to summarize, is whenever we see the US dollar falling dramatically, we see risk assets rising. We're expecting US dollar to fall later this year. So I think the backdrop for Bitcoin, crypto, and risk assets is actually very good. And that's why the market's piling in. That's why we're seeing all-time highs. Bitcoin is close again to pushing to a new all-time high. So we looked at the long term. This is the short-term view on Bitcoin. and we're seeing basically some kind of wave 1 up, maybe a wave 2 down, then wave 3. If it's wave 3, we're going to actually break outside of this channel that we've got here. This channel is just a corrective channel. It's nothing major in terms of downturn. You know, if I show where we come from with Bitcoin, you can see it came from much lower. The impulsive direction is higher. This is purely a sideways choppy correction. And so I'm expecting us to not only meet this channel, I expect we'll break through it. But even if we don't, and if it chops sideways a bit longer, the longer term outlook is we're going to break to new all-time highs with Bitcoin. Personally, I have no doubt whatsoever that's going to happen. And all of the fundamentals are so solid now for Bitcoin that I can't see it not happening. Obviously, there's never 100% certainty in anything really financial, anything predictive. We can't predict the future, but we can look at the probabilities, we can look at the fundamentals, and it's looking really promising. And here's another asset that we've been looking at recently, Litecoin, one of Bruce's favorites.
Oh yeah, Litecoin is the right coin.
So again, here we have a very clear ABC higher, some kind of ABC lower, and the C wave. So this is what's called, I mean, it could actually be some kind of zigzag correction. It's entirely possible, or it could be. But anyway, the C wave is in 5 waves. So it could be a 335 or it could be a 535. It doesn't matter which. The C wave is in 5. So you've got 1, 2, 3, 4, 5 quite clearly. If you look at the internal Fibonacci relationships, they're really good. And from there, we're beginning to push higher. We would expect to push higher to a new high above this previous high here, which is 112. It could be looking really bullish for Litecoin. We can get some short-term pullbacks because nothing ever moves in a straight line. But in general, it's looking positive again for Litecoin. We've had that good little breakout for XRP. So we were saying that XRP was, especially with this spike down we had, and then a bit of a test up and consolidation back, we were expecting this to be positive. We said we expected, I mean, the chart isn't actually that clear on XRP, but we do know that when XRP's had a strong sell-off with a shadow like this, a candle shadow like this, the expectation is for good solid movement to the upside. And if we look at that, we can see it rose from 41 to 54 today. That's what, 26% movement upside. So we do say, we've said over and over again in this show, when XRP moves, it moves with passion, and it has done this time round. So a great 25% movement there. And we've also seen some good positive news out of Solana. With the next upgrade is coming. I actually posted it on X. I think it's from memory, I think it's about the 17th of May. The next major upgrade. So they actually put in a temporary fix last Monday because the network was completely congested, transactions weren't going through, and yet Solana price actually held up very well. And we seem to be in this long expanding channel here, which looks as though we're probably going to be heading towards the top of the channel. Now, if it heads there, that's the previous all-time high, literally the all-time high for Solana. We could break through it, but I believe that's going to be a challenge. I think we're probably going to most likely get a pullback from there. But that just shows you we're currently 157. The previous all-time high was 260. So again, that goes with the common theme that crypto is looking very bullish at the moment.
Yep.
And I can't see an awful lot holding it back. So this is why across the board we're seeing lots and lots of green movement here. Gold is slightly down, oil is slightly down. So money is flowing out of these kind of safe haven commodities and it's flowing into the more risky assets at the moment. And that's why we're seeing green across most of the risk assets, a good amount of green across most of the risk assets. One of the best movers has actually been Litecoin, although we've got others injected, is a good AI token, 3.6%. Solana over 2%. And we've got Boom, Book of Memes, 3.67%. And then Bonk, 9.14%. So when the money's on for risk assets, it comes into these memes especially. And obviously memes getting a new lease of life with new memes that are coming out with with the ordinals and with the runes and so on. There's new meme coins, and so there's new life being pumped into memes at the moment, and that's why we're seeing such positive price movement. Doge, one of Bruce's favourites again, up 1% today, so it's actually pretty modest. But Doge is actually migrating, kind of evolving from being the old meme to actually a token with some real utility. So
Yeah.
Doge is maturing, I would say. So
they also are, they're not exactly like Bitcoin or Global Boost or Litecoin, but they're similar. And you're able to do doginals, so they're calling them ordinals on Dog and tokens and everything else. So I think there's a lot of growth. There's a lot of growth potential on the Dogecoin, Doge.
Yeah, I think there's this innovation, as you say, it's spreading across. So the doginals is like the ordinals on Bitcoin, very, very similar. So it just shows this innovation, and then it spreads across the tokens of similar characteristics and so on. And with Solana, there's so much going on with Solana, and with the Jupiter DEX. There's so many amazing things you can do on Jupiter DEX. You can do dollar cost averaging. There's all sorts of things you can do there, and it's very low cost. So the space is, well, it's evolving. You could say it's maturing, but it's certainly still evolving very, very fast. So there's so much opportunity here, and the potential for upwards momentum, upwards growth is phenomenal. And that's why it's probably important to have a portion of your assets involved in these kind of things. And just checking on the time there, what time we've got. But as you say, oil at the moment is having a bit of a breather. We had a bit of a pullback on oil. And that was kind of corrective movement upwards. So at the moment, we may be seeing a bit of a fallback in oil, especially if we are seeing growth expectations tapering off a little bit with in the US. If we're starting to see unemployment perhaps tick up a little bit and growth tick down a little bit, then potentially oil consumption will go down, even though we're heading into driving season. That's not the main driver for oil. And we're seeing a reduction in geopolitical tensions right now. So maybe we'll see more of a pullback right now in oil. And oil and gold tend to be quite well correlated. And if we do, and I believe we will soon be starting to see a pullback in inflation expectations, if that's the case, then gold will also likely be seeing a bit of a correction. Doesn't mean it's done, doesn't mean the move is finished, but short term, it looks as though we're likely to see a bit more of a correction, possibly on gold before we then perhaps move up again. I mean, gold is that store of value, kind of safe haven. So if we see a bit of turbulence later on in the year with the US economy, then maybe gold will have another rally. But I think it's time for a breather for those. I think it's time for another rally for the risk assets. And we just look here at the S&P 500. You know, we can see it's rallied quite strongly from what looks like a correction. You can see choppiness again, every wave sort of overlapping. Very choppy, very indicative of a correction. Whereas here we see solid movement up without correction within these little waves. Here, each of the little waves overlaps the previous wave, and that's what's called corrective movement. That's against the trend. And so it looks as though the actual trend is still higher. So I do think we're going to see a brand new all-time high coming reasonably soon on the S&P 500. So all in all, risk assets are looking very positive. And here's another one again with BNB. Been one of the favored tokens recently. It's got great use case, buy and burn. So it translates profits very efficiently from Binance. Binance is still the most profitable crypto exchange there is, even though
impressive movement on that, especially with everything going on. There's a lot of money behind that BNB token, and you and I have watched that thing come from just dollars, 600 and whatever it is today. How much is it today?
Today it's 615. I mean, it does just show you some of these new opportunities that at the moment, I mean, don't forget when Bitcoin first started, many people basically declared it was dead over and over again, many, many times. There's no future in Bitcoin. It's dead, it's dead, it's dead. It was a long time before it managed to battle its way all the way up to 1 cent in value. You know, that first transaction was 0.0009 of a dollar. So it was whatever it was. That's very, very low anyway. And it battled its way to a cent anyway. And then again, people thought it was dead. And yes, that's the same with a lot of these tokens. Some of these real low price tokens will battle away through adversity and come out strong. And I genuinely believe, and again, I don't want to be accused of shilling my own token, but I do believe that eBay has a real amazing use case because it's a rating token. We're rating set over 700 crypto assets. We've got an amazing technology built on AI technology to rate the assets in a decentralized way. We've got no bias. We've got no reason to rate things as they're rated. This is an automated system run by artificial intelligence. And I think once it really catches hold, I think there'll be no stopping it. So those tokens which started off at next to nothing with some amazing challenges, they're perhaps some of the ones that you should be looking at. Not for a big chunk of money, because some of them will come to nothing, but there are a lot of tokens out there. There's two ways of looking at investing in these things. You can look at the real solid assets like Bitcoin, Ethereum, perhaps Solana, perhaps BNB, some of these really even perhaps Litecoin, but some of these solid assets that you can include in a portfolio and you can trade them or you can hold them. They're really solid assets which should be there in time to come. There's another way of looking at it. You can look at those assets which are really low value, really low liquidity, really low volume, but look into the team, look into the potential, what they're doing, what's the technology about, does it make sense? And then you can't afford to put a lot into those because some of them, they will be beaten down by the challenges that they face and encounter. But some of them will break through into some of the big tokens, like Bitcoin did, came from nothing, broke through, like Solana did, like BNB, like XRP, like all of these big tokens. They came from nothing virtually and broke through. So that's another way of investing, is to spread your money across some of these little assets that you've researched very well. You've done your due diligence. And again, the eBay platform is a great way to do that as well, because we look at all of the tokens and then it's honed down into, at the moment, over 700 tokens which have enough data to rate them properly. And again, what's really interesting is sometimes some of that data is maybe fake data, not accurate data. So for example, if you're looking at the volume of a token, volume can be manipulated with what's called wash trading. And our system is actually able to differentiate between real volume and fake volume. And so sometimes you'll see a token that you think should be listed, but isn't, because perhaps some of the data is not correct. So we do a lot of the work, and I say the system does a lot of the work for you. It does it in real time. No person could possibly evaluate 20,000 tokens in real time, but our systems can, using AI, evaluate in real time and come up with information, and then we can highlight tokens within an efficient portfolio, which is the optimal theoretical best portfolio of cryptos you can have. But then you can, even if you want, do your own due diligence on the constituents of that portfolio and decide what to invest in. So never rely on one source alone. Always do a bit of your own due diligence as well. But it's a powerful tool. So a little bit about eBay there.
Well, I think it's one of those platforms, and as you're saying, a lot of the if they have staying power, and this is where the team comes in, that's so important. The people behind it, or it can just be the community as well, the community or the people behind it. I still include as the people behind it, and if the token or the coin has staying power, then that can mean a lot to your overall investment strategy.
Yeah, I mean, that's true. If something stayed around for a long time, and certainly eBay have been through tough times and still stuck it out, and that's important to have resilience. Because in business you have to be resilient. If you're not and you just give up and walk away, then obviously you've got no future. But to be resilient, as long as you're not foolishly being resilient, but as long as you can see that there's a roadmap there are milestones to be met, and what you have is genuine technology, which we do have, then I think the future is bright, because you've got a determined team, and that's really important. as you say, when you're looking at a project, especially some of these smaller projects that potentially have an amazing future ahead, like a lot of these other big tokens that started at nothing, that built and became something truly amazing. Same with small tokens like eBay and other ones you might want to look at. If you have a determined team, but as long as it's backed by solid technology, which again we are, then I think there's good reason to look further and perhaps include as part of a portfolio, a diversified portfolio.
Amazing. Yep. Agreed. Well, we've done our time here. We've done our hour. Another great show. Did you want to touch on one more thing here? Ethereum you're looking at?
Only really to say Ethereum is very much in the same sort of mode as Bitcoin. This is a correction, an ABC correction down. And again, we can quite clearly see an A, a zigzag B, and then a further C wave down to complete it. So I don't doubt that Ethereum will also push. And there's a lot of positives behind Ethereum. Yes, there's a lot of others biting at its heels in terms of what it can do, but Ethereum is going to be probably the next regulated ETF, certainly in Asia, but probably later on in the US. And so the floodgates will also open for institutional investment into Ethereum. And that's probably the key to the next layer of, or the next level of mass adoption. The next massive rush in prices will probably be as we get more and more institutional adoption. And so we've seen that with Bitcoin, we're seeing it with Ethereum, we will see it with others.
And it as well, very impressive move on Ethereum. I mean, it has pretty much followed the X's of Bitcoin, right? I mean, what do we have a low on this of 800, right? So 800, 1600, 3200 were 4X.
It's actually quite amazing that low was actually a perfect Fibonacci extension, 100% Fibonacci extension of our previous move down. So we could actually identify the low absolutely precisely in Bitcoin, in Ethereum. It was a precise identification. I'll just open it out a little bit. So this was the low that you're talking about there, and the low at that point was $879. $879, that's correct, isn't it? Yeah, $879. That was the low. I'll just see if we can just show that. We can see what appears to be, again, some kind of ABC move down in Ethereum. I'm not sure if that's the one we're looking at, but anyway, let's just see. I just measure the fib measurement from the bottom of that wave to the top of that wave. Transpose it to there. Okay, you can actually see, look at that, precise. So that measurement there, 100% transposed to there, gave you the precise bottom. This shows you the power of Elliott wave analysis combined with Fibonacci measurements. So the measurement, just purely the measurement of this A wave here, and then we got a B wave, which again, typically ABC for a B wave, that's perfect. And then the C wave was exactly equal to this. So again, these markets are not entirely random. This was a correction lower, an ABC correction lower. What that's telling you is it's very positive for Ethereum, because if that's an ABC low, we'd expect at least, most likely, an ABC high to at least challenge the previous all-time high. And if not, we could see an impulse higher to massively push to new all-time highs on Ethereum. But I'd say as a minimum target of 4,800. From where we are now, 3.2, that's a lot of potential gain there. And we can see this movement here. We've got a very impulsive move here. We've got a corrective move down. So we are expecting an impulsive move to the upside, substantially to the upside. And as I say, even if it's ABC down, ABC higher, we're still expecting another massive percentage higher, 3.2 to 4.8, 1,600. So another 50% from here as a minimum. And then you'll probably just protect your position with a stop loss in case it could blast right through to new all-time highs. But you're looking at 50% on your asset probably this year. No guarantees, we're not financial advisors, but 50% for the rest of this year. We've only got 8 months left of this year. And that's on the second biggest asset, crypto asset by market cap. So a really solid asset, which is likely to see ETF approval probably later this year, or possibly later this year. Certainly in Asia, we'll see ETF approval. So I think the future is extremely bright for Ethereum, but also across crypto in general.
Indeed. All right. Well, great analysis, Matt. It is always a pleasure. I'm gonna run and get the girls to school, and we'll do it again tomorrow. We'll be back on TV in about 5 hours as well, and yeah.
We've got Eric to look forward to on Friday, looking at another deep dive into Solana, and that's been absolutely fascinating. One of the more exciting chains, I would say. And Eric is really close to the Solana Foundation, knows exactly what's going on. He tips me off with all sorts of information that's happening there in terms of upgrades and so on. So that's going to be an exciting Friday. And also tomorrow, let's look forward to catching up tomorrow. Thanks, Bruce. Thank you, everybody.
That sounds great, Matt. That's good. And I'll probably line up another one of these Paris interviews for tomorrow, and then we'll have Eric on Friday. And another great show, Matt.
Fantastic. Thanks, everybody. Bye for now.
Cheers.